Hello and welcome. Good morning. Welcome back to the breakfast show with myself and my favorite co-host, Jose here. Good morning to everyone. Good morning, Jose. How are you today?
Good morning, Neil. Good morning to everybody watching. Hopefully, everybody had in the US side have a happy Fourth, had a great weekend, enjoyed had a great time with the family. But yeah, pretty good, Neil. Seems like maybe an exciting, volatile week this week. We got a lot of things coming in, a lot of things that happened over the weekend. So yeah,
Agreed. We have some interesting developments over the next couple of days, even today. I think we have some interesting stories we can look at. Of course, tariff deadline is approaching, although July 9th is still the tariff deadline, but if you do not reach a deal, then you will start paying on August 1st. So some might say, oh, the deadline gets extended. Some others are saying, no, still the same deadline, just the payment date is August 1st. But you still have 2 days to go. We do have a couple of news items that we can touch on. I think people from Europe have said that they've made good progress in trade talks and they're still working hard to maybe potentially reach, I won't say a deal, but probably a headline deal before July 9th. So to calm the markets down. We also have a couple of price target updates, upgrades as well across the board. So we'll touch on all of that in this video. I do believe you also made a video a couple of days ago talking about some AI chip news that might affect AMD and Nvidia. So we can talk about that. Quick correction here from do I still hold Tesla? So at the moment, I still hold Tesla even in the public portfolio because I did make a video yesterday talking about removing the small Tesla position in my public portfolio, but keeping it in the core portfolio because why would I need extra exposure at the moment while I'm still up? Well, now probably be down to being up 60-65% or so. So the Tesla small position in the public portfolio will be sold probably today, but in the core portfolio, it will still stay there until, well, I don't know, until I get bored, I guess. But in the public one, yeah, it will be removed because I don't really need that double exposure at the moment because of everything that's going on right now. Might get back into it when I see some solid developments, but just wanted to make that clear.
Curious there, Neil. How big of a difference are some of these portfolio sizes? Like, is it like a marginal?
I mean, the Tesla position in my core portfolio exists since 2019, and the one in the
Yeah,
public exists since February 2024. So the
yeah,
difference is big.
yeah. Okay, all right. Yeah, because that's what I wanted. It's like obviously selling in one portfolio if it's more just for allocating somewhere else, or is it for truly leaving the company? But it seems to be more like you already have plenty of exposure in one place. You rather let it go in another and use it for something else.
Yeah, the main
Um,
reasons I added again to the public when I first started is because of the big disconnect last time, which is why it's still up 68%, maybe now 65, 60 with the pre-market action. But now since we are closer to 300, by the way, I've already taken some profits before, but to me it makes more sense now to maybe just increase the cash pile, leave it in the core portfolio, and then see what happens, especially in this week when you have the trade deadline. I don't want to get to July 9th and then suddenly there are no trade deals and suddenly we do have a pullback across the board and I don't have that much cash to play with, although should have maybe been raising a little bit more, but I think this one should do the trick for the next couple of weeks for sure.
got it, got it. All right, that's pretty cool. Um, so yeah, Neil, let me. I don't know if you want to jump into any topic first, um, or if you want
Uh,
me to jump into maybe the AMD and Nvidia news that we kind of saw earlier.
yeah, we can
So
we can start with that. Then I have a little truist note on AMD, so we can do
all
that
right,
one
so
after the other.
let me just share screen really quickly, and we can get into this one. Um, so the screenshots are from maybe 24 hours ago. So this probably came out. These came out maybe on Friday night, Saturday morning, that the U.S. was reportedly planning to curb sales to new countries, Malaysia and Thailand, over fears that the Chinese government and Chinese companies were using these countries as a potential loophole to get them into China. So this is all according to Bloomberg, and I brought it to my channel just because sometimes stuff like this would create fear for AMD and Nvidia. So I wanted to kind of beat the media before it and try to share my overall opinion. Why I don't think it's necessarily the biggest deal ever, or something that AI investors should know, but there is a lot of information that they should know. So first, typically, I think what a normal person or a normal investor would go is they would go to Nvidia's revenue breakdown or AMD's revenue breakdown and try to see how much Thailand and Malaysia are in forms of revenue. But you would see that those two are not part of it, and you will see other countries, and you say other countries 7.9 billion a year for Nvidia's trailing 12 months. That means that most likely Malaysia and China, Malaysia and Thailand aren't that big. The funny thing is that's not how these companies report earnings, revenue. It's not on where the ships are being shipped to. It's more of where the billing is being shipped to. So I am gonna assume that a lot of the not a lot, that some of the Singapore revenue is also is also chips that go into Thailand and Malaysia. But again, I don't think it's a big deal because first, a lot of US based companies are investing in Malaysia. For example, we see Oracle investing about $6.5 billion in Malaysia. You see AWS has about a $12.1 billion. Same with Google investing in Malaysia with about Microsoft here with $2.2 billion. So if these, I kind of wanted to talk about what was happening. So I think this export restrictions is going to be more of a headline risk than an actual revenue risk. Both Thailand and Malaysia have yet to finalize a trade deal framework, and we have seen that the current government is using form of AI chips as a trade tactic. I think that's something that's going to be here. But I also believe that the biggest companies investing in Malaysia and in Thailand in form of any form of data centers are your Oracle, your Amazon, your Microsoft, and US-based companies. And those are the companies that are going to get any form of licenses approved if they end up creating this export restriction. And actually, I could see this being bullish for these companies, as then it kind of eliminates any form of threat that is not any form of competition that is not a US based company. And now you have Oracle, Amazon, Microsoft, and Google pretty much running the show in those two countries. The biggest impact would be to sovereign AI investments, which are kind of like government, academics, and maybe form of sovereign AI cloud players. But these are very, very small portion of the company's total revenue. So first, more headline risk than actual revenue risk. So just be careful if we start to see a lot of headlines like, hey, look, a new export restriction coming into AI chips. Like I mentioned, I believe it's not that big of a deal because most of the places investing dramatically there are US based cloud server providers. And I think they would get easily approved. I think this is more of just a trade deal framework. And don't be fooled by looking at revenue segments. It's important to understand how revenue gets contributed into the financial statements. And just looking at other countries won't really give you how much revenue is flying into those two countries. Any thoughts there, Neil?
No, I mean, very interesting, and it just shows how complex this whole thing is, right? It's not that simple. It's like, oh, you can do this, you can do that, we can sell here, we can sell there. It's a very complex ecosystem that if we do want to reach, I mean, go back to, let's say, normalcy, then I guess you would need a very comprehensive structure that really tells you, okay, these chips can go there, you can build out here and there, these countries you cannot get the most advanced ones, etc., etc. Because if not, then these stories will just come back time and time and time again, and well, we'll get nowhere. American companies, of course, will get hit revenue wise, right? I mean, Jensen has talked about this time and time again, how big a market China really is for them. And so yeah, I guess remains to be seen what happens. We do have here U.S. Secretary Scott Bessent saying that we are going to have several trade announcements in the next 48 hours. President Trump cares about quality of the deal, not quantity. I got a lot of new offers last night. So, yeah, good question if the Penguins will get a letter. That is a very, very good.
Definitely. They might even get AI chip export restrictions as well. Those penguins can't build their data centers anymore.
I mean, if it's those penguins from Madagascar, those are some tricky ones. You
don't mess with those.
No, you don't mess with it. Actually, I should ask my sister because she's there right now. So maybe she could ask them if they've got some Nvidia chips.
She's in Madagascar right now?
Yeah.
Oh, that's pretty cool.
Little trip, yeah.
She sees a lion, a zebra. I forget what else. A hippo walking around. Yeah.
A giraffe.
They're real.
Yeah, but she said so. We landed. I'm like, you landed what, at the beach? From a boat, but
it definitely seems like it's going to be a nice, crazy week with these tariffs, right, Neil? So this is obviously I follow it, but I haven't followed anything really this weekend. I just caught kind of quick information from X, and someone mentioned that they got postponed till August, but it seems like there's some caveats to that. What's happening here with the tariffs? Are they really being pushed off to August? Is July still the main time frame? And I see you just posted that the U.S. Treasury Secretary just kind of mentioned some updates as well.
Yeah, so first up, right now, it seems like European markets are actually green, despite all the tariff situation right now, because there's still no agreement with Europe. But so far, Europe markets are green. Pre-market in the US, the Dow basically turned green at this second. The rest still red, but not by much. Asia, bit mixed. Looking at the 10-year, 4.36, and euro dollar 1.17. So right now, the deadline is still July 9th. Okay, still July 9th. Today, apparently at 12, there are 12 letters that will go out from the White House to, I would assume, 12 countries. Now, I assume Europe is one big entity. And so I don't know who the 11 others are. I could speculate and say it's probably Japan, maybe South Korea, India, um, and then that leaves quite a lot of other countries out there, unless Europe is not one entity here, and many European countries do get a letter. But and I also wonder if those are letters that you send by FedEx, or is it an email or something like that? So that's also an interesting an interesting topic to discuss here. But July 9th is still the deadline at the moment, and whoever does not have a deal in place by July 9th, on August 1st, they'll start paying. I don't know how much, but they'll start paying X percent tariffs. I guess depending on the country, depending on the amount of money that flows flows in, that will decide how much they should be and will be paying on August 1st. So some are saying, oh, so this is basically extending the deadline from July 9th to August 1st. I mean, if you want to think about it that way, fine. To me, it just means that you have 2 days to reach a deal, and if not, prepare to pay in the next 3 weeks. So
They're not doing neither, Neil. They're doing fax machines. It seems here, custard and chips. I also like this comment that Florian and Neil. I logged in the wrong account, so I can't
no
project it right
problemo.
now. Look, Florian, so far I'm okay with this volatility. The only downside I see as a long-term investor is I can't catch them all. Good opportunities that are created. I agree. I mean, I think things like I don't mind, and it was around 8.15. Yeah, I actually don't mind as long-term investors. I don't mind the volatility, especially when you have kind of these crazy pull-ups. Volatilities create buying opportunities. So it's great when you really understand the businesses that you own, when you really understand the markets that they're in, because the volatility can give us great times. I mean, we got the DeepSeek, just in the AI space, we got the DeepSeek issue in January. We got the export stuff, the tariff stuff around April, I believe. And then there were so many things in between those 3 months as well, or 4 or 5 months as well, that gave even some nice opportunities. So, yeah, I'm a huge fan of the volatility, at least for now. Maybe my answer might change in a year or two from now if we continue with this volatility, but at least for now, I'm okay with it.
Yeah, no, I agree. I agree. I mean, especially this year, you have plenty of opportunities, right? You had, like you said, that DeepSeek drama that lasted a couple of days. Then you have the big tariff drama crash that also lasted, I think, a week or so. But all in all, I mean, plenty of stocks at all-time highs, 52-week highs, markets near all-time highs as well. So take the opportunities, right? Take the opportunities, especially from very, very good companies. Now, staying here with AMD real quick, we have here Truist that have put AMD as a hold with a price target of $111. They said the following: debate ranges around AMD's data center GPU strength, not whether the company can deliver data center GPU product and ramp revenue, but instead to what degree our customers, one, buying to stimulate competition and price check Nvidia, this is their view, or two, buying because they or their customers actually prefer AMD's technology. A narrow controversy that emerged mid-quarter was the question as to whether AMD's next-gen data center GPUs will be used at AWS. Based on our discussions with management, we believe the appearance and disappearance of that customer's logo from AMD's list of customers reflects a desire for some customers to announce supplier relationships at their own events. Okay. Industry contracts reflect a significant inventory build in the channel, which is difficult for us to explain. Near-term catalyst, we expect the next significant catalyst for AMD will be Q2 earnings. We do not have a strong view as to whether this will be a positive or negative catalyst from now. Wow, what a very, very interesting and informative note, I have to say. Right? I I love these types of notes. It's the same with
Yeah,
the Google one from last
it's
week. The $3 difference, and they said basically nothing.
Yeah, I mean, just the first, not whether the company can deliver data center GPU product and ramp revenue, but instead to what degree our customers. I don't know. It's just like
It's like you have to
we don't
release a
care
note.
if you're selling product. It's like it's why it was weird. Um, what I found also interesting is I actually don't I get the point that they're trying to make. Are they just buying AMD because they want to have a competitor in this space, or are they buying it because they prefer the technology? I'm actually a fan of, and I believe that you can start off as number one, and in theory, as more you stimulate, more money you're given because of number one reason of because you just want to stimulate competition, you get closer and closer to being the number two reason where now you're being bought out because you have a competitive product. Um, so it's pretty weird. I agree. I think this is a bunch of nonsense. Um, there was something else that caught my attention. Oh yeah, that I keep hearing from the channels that I follow. Amazon is a customer. I still don't get it why they haven't talked about it. I don't know if they're still just testing the waters with the chip. But does Amazon have any data center event anytime soon? I think their AWS event is not until late fall of 2020 until the fall AWS event. Let's see.
I mean, and even right, if let's say we are now, if tomorrow is AMD's Q2, right, and they
Mhm.
beat across the board, guidance is amazing. Who cares, right? Because
Mhm.
as long as they say, oh, we are going to generate tens of billions of dollars in revenue, and as long as they keep growing, like who cares about these types of small comments? Of course, it would be great. Would be great to say, oh, actually, we've had now a huge announcement, a huge order from Amazon for AWS for the MI350s, maybe even MI 400. Of course, that would be insane. But so far, it's not like AMD needed these announcements at the moment.
Mhm. Yeah. So I mean, interesting for sure. Um, some things I found in the consumer side, staying here with AMD, Neil, there was one thing I found pretty interesting with the consumer side is now I'm looking at laptops, and AMD now is the one that's priced heavier than Intel.
Huh.
So that does, I don't know if it's just, it could be a mixture of two things. AMD feeling more comfortable with its technology that it doesn't mind having an average selling price, or it could be Intel really having a pricing war right now that it really doesn't, it rather kind of lower their margins to continue to have some market share in this space. So that one I was pretty interesting. A lot of the new laptops that I see coming out with this generation, AMD does seem to have a little bit pricier price points.
Yeah, it's interesting because I mean, okay, it's not maybe it's not the same as the one in the note, but the note says that there is inventory buildup, etc., etc. I mean, if your inventory does get uh, quite large, you would like to lower the prices, right, in order to flush it all out. But seems to be contradicting here.
And Neil, I know you want to talk. I think you want to talk about something else. There was another topic I talked about yesterday that I thought was kind of it kind of goes with the AI space, um, and how I think the AI market right now is pretty crazy. Let me just anything else here to AMD, or can I jump to this one, Neil, that I have?
Now you can jump to this one. I just have to get a glass of water, so I'll be back.
All right. Um, so let me share screen really quick. Go. Right now, I do think the AI market is extremely crazy. I really love this chart, and this chart came from Marvell Technologies AI investor event, and it kind of just showcases right now that AI investment doesn't just worry about four companies anymore, right? Back then, if you think about AI investments, you would just worry about capital expenditure from Meta, from Google, from Microsoft, and from Amazon. But that's not the case anymore. You have to start looking at capex from other players like Tesla, maybe eventually Apple, if they ever wake up, Stargate, OpenAI, XAI, Oracle, and all these other AI companies. And I'm gonna wait for Neo to show. Actually, this I thought this was pretty insane. So I talked about it in my previous video, but there are reports and confirmation based on Elon's tweets, confirming some of the things that XAI is actually buying an overseas power plant. Did you see this, Neil? Well, let's see if he puts his headphones on. Have you seen this, Neil, right here, where the confirmation that Elon Musk confirms that XAI? Oh, he probably didn't hear me. Let me know when you're back, Neil.
I'm back.
So I don't know if you saw this one. I thought this was pretty crazy, where Elon Musk confirms that XAI is buying an overseas power plant and shipping the whole thing into the US to power its data center. And this is to kind of power that 1 million GPUs. I think this is first showcases how crazy the AI market is, but it does kind of showcase how speed is a major asset into this space. And you can't be, if you slow down even a little bit, it's enough for competition to catch up. And it's crazy that it's easier and quicker to kind of deconstruct the power plant overseas and then kind of reconstruct it here back in the United States, and still kind of pass all the bureaucracy, all the red tape, and all the other stuff that needs to go. So it does showcase that there needs to be some change in the if we want AI to really be a revolutionary product coming out from the United States. There needs to be some changes there. It also, I did ask AI, I'm like, how do you ship a whole freaking power plant? Like, do you ship like all these, like those big cylindrical figures? And they're like, no, shipping a power plant is mostly about kind of like some of the turbines, which are still huge. They're still massive, massive, massive. And they mentioned that modern gas plants come in like a shippable pieces already. Shippable being like massive, massive freights and massive trucks that need to take it, but it's still shippable. But again, it does kind of showcase that the power constraint is massive bottleneck. I also think that one of the main reasons XAI is able to do stuff like this is maybe because of Elon's experience. I'm pretty sure with like SpaceX, the types of products that they might have to ship all around the world are gigantic in size, to kind of build maybe some of these massive spaceships. So sometimes I do think prior experience is a major, major asset, because shipping something like this from a place that doesn't have much of a port, you're going to have to ship it through various places. It's a logistics nightmare. But overall, it just kind of showcases, Neil, how crazy this AI market really is right now, and how many billions of dollars these people are doing right now to stay ahead.
Yeah, I think he responded to a Neil Patel comments, right? Asking about Dylan Patel. Who's Neil Patel? Huh. I don't know. Neil Patel. Maybe I think it's someone from the Fool.
There is someone from the Fool. Neil Patel, yeah.
Yeah. Yeah, no, it's impressive. It's impressive. I mean, it's crazy what people do these days for power. I mean, not power energy. power energy. I mean, how bad is the situation that you have to go disassemble a thing in another country, ship it to your country, and build it again? It's definitely not that efficient. So I mean, yeah, the situation might not be that great energy wise in the US, if that's the case. That if you really have to go to another country, disassemble, ship it, build it back, turn it on. That's quite crazy.
Yeah.
I do have a couple of extra things here. Let's see. How do I do this? Related to Pony AI, actually. So, which is related to Uber. So Pony AI and Dubai's RTA, I assume this is the transportation office authority or whatever. Roads and Transport Authority, it says on the picture here. Genius. Just revealed their robotaxi. They revealed their robotaxi rollout plan, aiming to launch supervised trials later this year. Of course, Pony AI and Uber have partnered up. Dubai wants 25% of trips to be autonomous by 2030. Pony AI already operates 300 robotaxis in China and plans to reach 1,000 by year end. Of course, we've also had those recent rumors that the previous Uber co-founder and Uber might be looking to basically take control of Pony AI's US operations. Remains to be seen if that's going to happen and how much that will cost. And of course, this announcement right here is good for Pony AI, but it's also good for Uber since Uber is the partner here in Dubai for Pony AI. We also had here a Bank of America note buy rating on Pony with a price target of $21. On May 27, Pony announced that it has entered into a memorandum of understanding with Dubai's Roads and Transport, basically what we've just read, and that's why they now get a buy rating and a price target of $21. The collaboration will introduce Pony AI's autonomous driving technology through a multi-phase rollout. Initial supervised trials are set to launch in 2025, followed by fully driverless operations in 2026. So pretty good news on that front. One last thing here, and that's with regards to another very popular name recently, and that's Iron Energy. So they reported a record June revenue of $65.5 million from Bitcoin mining, $51.3 million total hardware profit.
Neil, do they report earnings, or is it one of those companies that gives you the monthly numbers?
Yeah,
okay,
monthly numbers. They hit their target of 50 exahashes a second, and AI cloud expanded to around 2,400 Blackwell GPUs. And this is basically the summary. So 810 megawatt data center capacity, $68 million total revenue, 16 total net electricity costs, $51 million hardware profits. They now have 4,300 Nvidia GPUs, and they reached their target of 50 exahashes per second at the moment. And I assume that the stock is up. Only up 1.6% at the moment, but it's up 25% in the last 5 days. The couch touch continues, it seems. The couch touch continues, it seems.
Neil, do you think this one's crazy though? I mean, it's $68 million in revenue. Let's assume 70. Now times that by 4. You're giving it what, a 280 million annual run rate?
No, times
and
that
it's
by
priced
12.
Oh, by 12. Yes. Okay, so that's different now. Okay.
Still
700. That's
840.
Okay, all right, but now, okay, that now, I mean, with the price market cap of around $3 billion, it's not the craziest thing I've heard of so far. Then,
Not at
okay,
all,
yeah,
especially
it's
not
not.
if they continue to grow very, very
Yeah.
fast, right?
Oh wow, that's interesting for sure. Very nice, very nice.
Yeah, no, I've been looking at this one. I've been looking at the one that you said, Cipher Mining as well. I mean, look, the thing here is that it is very interesting. They are of course very well positioned, right, to get huge contracts for those that really need energy. But every time I think about it, I think about Applied Digital, right? Okay, yes, it's true that it went up quite a lot, but that's because this was the April lows. But why after the 15-year $7 billion contract has this retraced back to around $10, right? The whole idea behind this is that, they're getting huge deals, which would generate them close to $500 million in revenue yearly. And so I'm scratching my head here to understand why the stock went down and not continued to rally based on actual contracts, not on potential, but on an actual contract.
Actual contract, yeah. I'm just saying, if you pull the trigger on this one, you text me, I'll pull the trigger with you.
on Applied Digital or
on Applied Digital. Applied Digital. Out of all, I mean, this is the one I know a little bit more about, and like you mentioned, it has that. I think partnerships go a long way, especially in kind of this AI race, and you're able to keep good relationships with big customers. I mean, we just saw OpenAI willing to do some massive numbers with Oracle, right? If you're good with them, they'll somehow find money somewhere in their nonprofit organization and be able to pay you billions and billions of dollars.
Yeah. No, I mean, it's tempting. If we do
Yeah.
get like a market overreaction this week and we do
Mhm.
drop well below $10 again, I might just text you and say, actually, let's YOLO this one. Yeah,
Yeah, let's. I'll be down with that. I'm down with that.
let's YOLO
Um,
this one. And then we'll see with the rest, because the rest is also very interesting.
yeah,
Of course, I'm not going to bet the whole house on it,
yeah.
but a little YOLO bet here and
Yeah.
there.
The thing for me with iron that doesn't, I wouldn't say doesn't sit well for me. It's just how small it is in forms of kind of like this AI space. Like 4,800 GPUs, it's not that money, right? I mean, I think you have like sovereign AI building stuff like that, and then like your customer base is most likely going to be smaller users that I would assume if you're either going to go two routes. You're either going to go with someone who's going to spend a lot of money, but that one person is going to take up the whole 4,800 GPUs. A massive AI company is going to need more than that. So either you're going to have the massive concentration risk of one player, or if you're getting a lot of smaller companies, they're most likely the small places that only need 8 GPUs at a time. So it's like there has, I don't know, with this amount of scale, it gets pretty tricky. And then scaling it from, there's a massive difference between running a 1,000 GPU cluster, a 5,000 GPU cluster, a 10,000 GPU cluster is a whole different level. Now we're getting
Mhm.
to 100,000 GPU clusters. Like a, the it's hard for big tech players to do that. Someone not there yet with only 4,800 GPUs just doesn't excite me, even though I understand, right? Like it has that massive growth opportunity. But I think there's a huge learning curve that could create maybe some negative sentiments in the future,
Yeah.
just
So
because of smaller size.
yeah, no. So the idea is not because of the amount of GPUs that they have. The idea is because of the speed and build out that they will have. So, for example, the data center, the energy that they can provide. Because think
Hmm.
about it as purely, you have players that do have the GPUs, but do
Hmm.
not have the energy.
Like
This
we
is
saw with
where,
Applied Digital.
yeah, this is where Iron
Hmm.
comes in, because
Yeah.
they, I see here, the next build out of their data center should offer 1,400 megawatts,
Hmm.
and should be energized by April 2026. So for all the big players that, let's say, do have all of the GPUs, right, the tens of thousands of GPUs and whatnot, but do not have the, well, capacity to make use of those GPUs, what's the point? So that's the bull case. Let's say here is that they will go to players like Iron and say, oh, you know what? We want to. Here's a contract. We want to use your data center. See, since you have the capacity and all of that, we'll provide the GPUs, and you just provide us with the energy necessary
Hmm.
to run those clusters. And it makes sense, right? Because everybody
Yeah.
wants to move as fast as possible. And since they,
So why are they trying to build their own clusters themselves? Are they trying to
I
just
mean, they do have a
do
Bitcoin
the
mining
both?
business, so
Okay, yeah.
plus
Um,
the fact that they can mine Bitcoin at, I think it was one of the most affordable and energy efficient
mhm,
way, bodes well for them saying, oh, actually, if you want to build huge clusters, we know how to do it in a very
mhm.
efficient manner as well. Plus, does it hurt a company to have GPUs? In
Definitely
today's
not.
in today's day and age, I think it's like a good thing to have
Mhm.
right
I was
now.
actually
But yeah,
also surprised that they which did they talk? Was it B200s or B300s that they did they talk about which chips they have?
I will tell you right now. I think
And
I
was it
think it was
GB or
B.
was it just B?
I think it might have been just B. But
Okay.
let me, because they are also, I think, one of the only ones that can run it efficiently with air cooled and not liquid cooled systems.
Mm-hmm.
Um,
Then
let
it's B,
me,
yeah.
then it's
And it's most
B.
likely a B200
Yes, a
then.
B200, B300.
Yeah. Oh, they even mentioned B300. All right. Overall,
Correct.
that just gets me excited. If small players are getting um, some B300s already, I can't imagine what the big players are getting.
I mean, we've seen CoreWeave, right?
Yeah, we've seen CoreWeave get the GB300. We've seen, yeah, gets me pretty excited about this Blackwell Ultra overall.
Yeah. So I don't know. It's interesting. Those of course they are driven by momentum at the moment, and I would even say hopium, right? That's why they're up
Hmm.
so much in the last couple of weeks. But one big gigantic contract can of course change the whole thing here.
Definitely.
So yeah, we'll see what happens. We'll see what happens in the
And
next couple of days with this
as we're seeing
YOLO play.
in this market, it's very possible for you to get one of those random contracts. It's not like during this market, I think the probability of something like that increases. I mean, like we saw that XAI kind of with that power plant. And Barb here, Barb Bacoa, now making me hungry. I worked for a utility for several years. They've had a few old inefficient plants they had stopped using in case of emergency. So it's not that unusual that a company might have a plant to sell. Yeah, that's what I was kind of reading on the report that overseas prior to COVID, they had some plants that they thought they needed for emergency. They ended up not needing them, so they were able to sell the equipment. And I think he was, or they were mentioning that all it takes is money to disassemble and move the power plant. There are plenty of companies that do this kind of work. That's true, right? But I think it's interesting to see it once for the first time actually happening, right? It's well, it's not impossible. It's almost unheard of, and it just kind of shows that the speed needed for AI market is crazy. But second, that it also showcases that maybe there needs to be some changes in regulations here in the United States, if the overall end goal is to be better at AI.
Correct. And I mean, at first when I read the comment, I was like, what topic are we talking about? But I assume we're talking still about the Elon and
Yeah.
disassembling
Oh,
of
yeah.
the. Yeah.
Yes. Like that. My apologies there.
No, no problem. No problemo. I know there are lots of questions about Webull. I'm sure
Hmm.
you have seen quite a lot of posts about it more recently. I actually have a video going live pretty soon talking about the whole thing. So Webull,
Good,
as you
because I
can
haven't
see.
followed it, so hopefully you go from beginning to end, so I can make it. Hopefully you can give me a season recap of what's happening with Webull.
Yes, now in the video I go over everything: the CEO, his education, the Chinese liaison, the bull and the bear cycle in the last week, because we had the bull and bear cycle for Webull in the last week. So as you can see, the stock did also go up quite quickly over the past couple of weeks, but now it seems like the stock will open under $13, which means that pre-market we're down around 10%, 9 to 10% or so. Now, the reason
They just
why.
need to come out with a press release saying either stablecoin or tokenized companies, and that's it. Back to all-time highs.
Exactly. Exactly. I mean, they do have the best ticker out there in bull markets, right? Um, bull. So the reason why people were very, very excited about this a week ago is because, well, of course, Robinhood reached $100. Robinhood has 10x basically since, I don't know, a year and a half, 2 years or so ago. And so you get here a Webull, which is a bit similar to Robinhood. Even the UI is very similar to Robinhood. They offer similar products. Not all of it is exactly apples to apples, but you could see the resemblance. Plus, it also helps that this has a market cap of around $6 billion or so. And so people are like, actually, you know what? Seems like this company is doing a little bit better. Stock price, we have come down quite significantly. And so why not? And I was like, actually, we talked about this last week during the live stream. And I was like, you know what? Actually, it's worth looking into. So I did. The problem that people have right now with Webull is what has happened last week. So Webull has announced a $1 billion equity agreement with Yorkville Advisors. Okay, so at first, when I read this, I was like, okay, big deal. This lets them basically raise $1 billion whenever they see fit. Okay, I guess good thing, right? It's very flexible. Now, some people said that Yorkville is bad juju for many small caps and SPACs. So I did some digging, and it turns out that Yorkville is known for SEDA, so standby equity distribution, that lets companies raise cash by selling new shares at a discount. In this case, Yorkville will be able to buy Webull shares whenever Webull decides at a 2.5% discount, which of course, this could cause massive dilution for existing shareholders and can tank the stock price. The problem with this is that in the past, Yorkville had a couple of issues. So they faced SEC fraud charges back in 2012, which were dismissed, but still. And then, if you look at the companies that they've worked with in the past, Mullen, VinFast, even Trump Media, and I think also Lordstorm Motors or whatever, I mean, those are not the high quality names that you want to be linked with. So on the one side, you ask yourself, okay, this for them also they have now cash coming in. They've been raising cash. You do this because maybe you want to grow faster in the future. Maybe you want to acquire other companies. Okay, fine, no problem with that. This gives you the flexibility. But why go with a name like Yorkville? Like, why not go with a more reputable name? Is it one, because there was just nobody else, which I don't think it's great, or two, which I do think is maybe worse? Is it because management did not know or does not know that Yorkville has a bad reputation? And that basically scared here investors that were bullish on Bull and are now either bearish or less bullish. Because to be honest, if you cannot trust management in this case to do the right thing, then of course, what's the point, right? What's the point? Even if the business will continue to do well, because I read through the reports and everything, it does seem like things are going up and to the right. Yes, it's true that they did increase registered users more than funded ones. So you can sign up to the platform for free. You don't need to fund your account. As an investor, you would like to see funded accounts increase. But this is a very strange move to me. Like, this is not necessary. And if it was necessary, then I think investors would have loved to see another name other than Yorkville there, because of their past and because of what has happened with the other companies that did work with Yorkville. Most of them have seen their stock crash by 90+%, and some are even delisted at the moment. So it's not that great. On the last point here, I'd say Webull is not like these other companies. I do think that Webull as a company, as a business, is better than the names that I've mentioned before, and that could be the key differentiator here, right? The fact that it's not a shitco or whatnot, like the names that we've mentioned. So I don't see this business at the moment go down by 99% or get delisted, but it is a strange move.
Is quick two. So I did think it's a strange move, Neil, just because I don't know their financials, right? So I don't know if they're what would be the reason to raise debt. Obviously, right now, like you see it mainly in hardware companies, like you see a lot in Supermicro, you see a lot in companies like CoreWeave, for some of those players that are trying to expand their data center space, their AI space, their hardware space. My first question is, why would you need the cash, right? Why do you need to build up this cash, and why are you willing to kind of, in theory, based on the history past, why are you willing to let it go at a at a at a discount? So cash about $1.2 billion and net debt of about $1.2 billion. So they're pretty much a 1-to-1 ratio, right? If I'm reading it correctly there. So is it just to make that balance sheet better? That I don't know. It's just weird. I agree. It's a little bit weird here on it. Also, is this Webull? Is this a Chinese-based company, Neil? I forget.
Okay, so
that's another thing. Okay, go ahead. Let's go ahead. You put the finger up. It means it's great information coming up.
Yeah. So first of all, I do have a full video, so don't skip the video next time. But first thing, you can see that operating income did turn a profit last quarter. Same with net income. So they're definitely going to increase their earnings over the next couple of quarters. At least that's the plan. And as you can see, I mean, free cash flow should be an issue here unless crazy things happen. But and let me just pull this one up, because I know, again, a lot of people do get spooked when they see, oh, the founder is Chinese, oh, the company is a subsidiary of whatever. So let me pull this up. Okay, so first up, this is the CEO of the company right now. Okay, this is the CEO of the company since 2017. Webull was founded in 2016 by Wang and Quan and began operations under Hunan Fumi Information Technology, a Chinese holding company. Okay, now what is this Hunan Fumi whatever? That's a Chinese holding company that founded Webull. They operate as a broker in the US and China, various other countries. I also found out that Webull Thailand has its own CEO. So I guess every big region gets its own CEO. Now, Hunan Fumi Information Technology is also associated with Xiaomi, a Chinese telecommunication giant. Now, the thing here is that although this is a Chinese holding company, Webull, the company right now, the brokerage in the United States, is regulated by every regulatory body in the United States, right? So everything that they should be passing, they have passed. Everything that the Robinhood does, that passed or regulated, they're doing the exact same thing. So yes, it's true that Webull is under that Chinese company. This is Webull United States is Webull United States. Yes, they have some links with China. I think there were some representative in the United States from, I think, both sides that raised the issue that, oh, they have ties to the CCP and then blah blah blah, and then the data isn't safe, etc., etc. But so far, nothing has really been found here. So yes, okay, I see why some people want to raise this thing. But they are regulated just like any other brokerage is going to be regulated in the United States. And I assume that if there was some shady things going on there, they would not have been able to operate. Maybe I'm naive, but I think that is the case.
I don't think you're naive. Again, I don't follow it, so I was just trying to get as much information as possible, and I felt like that was one of the things I used to. I would be reading a lot, Neil, in on Twitter and stuff like that. So, yeah, pretty interesting here.
Yeah,
Like I
no, very.
mentioned, and like you mentioned, right? It's a big questioning on the reasoning behind the raise. We also do have some new news, Neil, coming out. We talked about it in the past. CoreWeave stock did finally acquire
Crash.
crashed, but did acquire Core, that
Ooh.
Core business. I forget what it was
Yeah,
called.
Core Scientific.
Core Scientific. Yeah. So let me see if I can pull up the press release really quickly.
$20.40. How much of a what? So wait a second. I'm something is not right here with my
What are you now liking, Neil? Let me just pull up the screen really quick while you're doing
because
that.
I'm seeing Core Scientific down 15%. I'm like, what? How does
Uh,
that make any
they're
sense?
paying $20.40 per share.
Yep.
And what's the stock's trading at right now, Neil?
It was trading at 18, now at $15.
Oh, that's weird. So
But maybe it explains here
maybe there's
why.
something within there.
Yeah.
Yeah, this represents a 20 based on the closing price of CoreWeave. Wait, that's closing price of CoreWeave. Wait, what? The closing price
This
of CoreWeave on July 3rd was $20.40. No, it wasn't.
No, but I think it wait. Let's
Unless
read the
they're
one
class
before.
common A.
Wait,
Okay.
as the agreed upon exchange ratio implies a total equity value of approximately $9 billion. So I assume that no, I assume nothing.
I think this is what sucks right here. Their core scientific stockholders will receive Um, shares.
Put it in your ChatGPT $200 a month and let it explain it to you, because this thing is strange. Like, I would have assumed that the stock would be up, not down
No, well,
15%, 16 now.
yeah. Hold
Because
on. I think it's most likely. Let me just see. It doesn't seem under the term of the merger, of course, will receive. So it's not even a cash deal. I think that's what sucks. It's going to be more of a stock based a stock trade. No, shareholders aren't going to get money. They're going to get shares. Obviously, this is really good for CoreWeave right now, as the stock is sitting at 100 and something dollars, right? So investors aren't that excited about that.
I mean, this is, I mean, huh? I don't get it. Like, CoreWeave is paying a premium to acquire this company. Shareholders of Core Scientific will receive, okay, they will receive newly issued shares of CoreWeave, which means existing CoreWeave shareholders are getting diluted here. Okay, makes sense.
Stock is down 6%. Yeah.
Yeah, come on. But I still don't get why Core Scientific would be down so much. So if someone knows, please enlighten us. This is a head scratching moment.
There might be something. I would just say maybe the market just is not valuing the actual stock price as much as maybe CoreWeave and Core Scientific are. Like, I wonder if it was more of a pure cash deal. You have less volatility happening in the market, right?
Okay, let me let me check what is happening with the other players out there, because we did say that once we might get this deal done, then players like Iron and others might also get affected by it, because they also could be potential. There might be a potential re-rating and stuff like that. So it seems like Iron by the way, this Core Scientific is now down 16%. Iron is now down 2.5%. Wait, why am I not sharing this?
Yeah, let me go ask ChatGPT why it thinks.
Yeah, do that, because I mean you're paying so much for that service, so let those GPUs heat up a little bit. So Iron is down on that news. Applied Digital has not moved at all. What's this? Yeah, Cypher is also down a little bit on that news. What about Nebius? Nebius hasn't really moved that much. And CoreWeave is down, like you said. Let's see if we are going to touch that 20-day moving average here. What is happening on my phone? Nothing. So yeah, very interesting. Very interesting. In the meantime, you ask ChatGPT. Let me answer here a couple of questions. First of all, Ariel, thank you very much for the support. And yes, if you're joining us here from X or YouTube, especially YouTube, hit the like button. And if you are coming from X, let us know right in the chat from X, just so we know that some real people are actually listening from X, because I'm still not convinced that real people listen through X. But okay. There were some questions here about Oscar. I wonder if Oscar, it's flat. Okay. It's flat at the moment after crashing last week. I do have a small position in Oscar at the moment, not for the long run. I mean, might turn into a long-term thing if they do clarify quite a lot in the upcoming earnings report. But yeah, it seems like the stock is now sitting just above that 50-day moving average, which I think is a good thing as long as it holds. Is it a good time to buy it? I mean, it's better to buy today than at 20-something dollars. But I do agree that there is maybe a little bit more uncertainty right now with the bill that has passed. And so you might want to wait until, you don't even have to wait until Oscar reports earnings. You might want to wait until you get more clarity around that bill and how it might affect or not affect these types of companies. because I did listen to Scott Besson's interview yesterday when they did talk about healthcare and cuts in Medicare or Medicaid, one of the two. Medicaid, anyways, doesn't impact Oscar, but it does impact a company like United Health here, which is up a little bit pre-market. And he did say that there are no cuts. There are no cuts for one of the two, Medicare or Medicaid. I have to go back and see that interview. He just said that in order to get the benefits, there are changes. So it's not like, oh, free willy, everybody can get the benefit. No, you actually have to have a job or something, apply for it, etc., etc. So the benefits still stay in place. Just the way to get those benefits have changed a little bit. So maybe that's also why the stock, both of those stocks, did not really come down drastically after the bill has been announced. Plus, I would assume that a lot of it is also priced in. But Centene and United Health are reporting earnings later this month. United Health July 29th, and I believe Centene 22nd or something like that. So keep an eye out on that. I'll, of course, update you, whether it's the live streams or another video. So voila, that's that. Oscar, what's my average here for Oscar? I think it's still 17.3 or something like that. Like I bought when the day it crashed 20%, but as you can see, it did drop a little bit more. But I mean, big deal. That dollar difference to me won't make such a big difference, and maybe I'll just average down a little bit whenever I can. Going back to the ChatGPT stuff, Jose, do you have an answer for us?
Yeah, I mean, so first it's important to know that you're getting about 0.12 exchange ratio of CoreWeave, right? So for this, so it's all going to be determined on CoreWeave stock price. It's gonna now the actual value, of course, is pretty much dependent on CoreWeave stock. Right now, the stock is trading at around 155, I believe.
57.
Let's see what's CoreWeave. 157. So if you do the 0.12%, it implies a fair value of about $19. So Course is still trading closer to $16 right now. So there's that arbitrage spread there. The
14.5 now.
The only thing that's there is now the market, pretty much what I think it was Roberto just mentioned, is just that the market probably thinks CoreWeave is overvalued. They think that this is going to continue to drop. CoreWeave is going to drop even more. That that arbitrage is a big risk between the two. Yeah, pretty much what I was saying. Yeah. It's just it would have, but if it would have been a pure cash deal, it would have been more exciting for Cores. But since we see, so pretty sure you can just pull up CoreWeave. Yeah, so it's going to be you're going to get about 0.12%. Every one share of Cores is going to get 0.12 of CoreWeave. So
at what closing price was it?
Well, when they did it, it was valued at that $9 billion. But I think it's now just flexible, right? Does that change over time? It's gonna, like, now that the deal is done, it doesn't matter. You're still gonna get.
Yeah, but if the deal was done and the share price of CoreWeave was X dollars, and now you get 12% of that, 12% of the price back then, could be the reason why Core Scientific is down, because you will only get $14 per share or $13 per share or whatever that will be. Very strange deal.
Yeah.
Very strange.
Yeah, so deal. When that merger and acquisition, guys, Neil.
And it's it's funny because CoreWeave did want to acquire that company last year, no?
Yeah. Yeah, so Roberto's saying, I think it doesn't matter the closing price, right? It's just no matter what price it closes to, it's still going to be that 0.12 shares. So it doesn't really matter. If CoreWeave drops down to $10, it's still going to give you 0.12 shares. It's not like it's going to increase that. So it's all truly dependent on how CoreWeave's price moves from here. So if you think CoreWeave is extremely overvalued, you're going to want to...
Can you get do you have the press release Still up?
Man, you're asking for too much, Neil.
Asking for too
Let's
much.
see.
Asking for the basics.
um,
If not, I will.
Share screen. Yeah, I got it. I got it,
Ah,
Neil. Don't worry. Don't
okay.
worry.
At least you're doing something here.
All right. So here, there.
Um,
See, under the terms of merger agreement, Core Scientific stockholders will receive 0.12 newly issued shares of CoreWeave Class A common stock for each share of common on a fixed exchange ratio.
and when is this expected to close?
Bum, 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 bum. The transaction is expected to close in the fourth quarter of 2025.
Aha. Okay. So that's okay. That's probably also why, right? Because maybe the market does not believe that CoreWeave will be worth $100 and something per share in Q4.
That's what we've been saying.
No, but I didn't know if I didn't know the closing
Closing date.
Yeah.
Yeah.
Imagine if it went double.
Yeah, if you're double, you're obviously gonna. So from here on out, CoreWeave, Course is just gonna move on CoreWeave stock price. If you see massive bullish sentiment towards CoreWeave, Course is gonna move, and unfortunately, the also is gonna be on the negative side as well. I do think this is a better end on CoreWeave than it is for Course, just because I do think we talked about it. Their shares are a bit overvalued. So I think CoreWeave is winning here. It also means that immediate elimination of over $10 billion of future lease overhead to be paid for existing contractual sites over the next 12 years. So you're going to see less future lease. That's great. I think that's wild too. So you're
Because they
paying
had a
$9 billion
contract.
because they had the contract. You're paying $9 billion, but you're going to eliminate $10 billion of your liabilities just like that. And then, yeah. Wow.
But you get diluted.
Yeah, you get diluted. Yeah.
Interesting.
Yeah.
Interesting stuff in this market.
I think Core's got messed up here. I think there wasn't even a date. It was just yeah.
That is.
They didn't even go out for dinner. It was just Core's got hit bad.
Yeah, and at the moment, Nebius doesn't even move. Nebius.
It's not about Nebius, all right?
I know it's not, because it's just so much better. Iron is now down a little bit.
Roberto, I agree with Roberto here. Roberto saying
Core Scientific got bullied.
Yeah, I'm pretty sure I got bullied here.
Yeah. It represents 20. Yeah, at the moment. But by Q4, might not.
Mm-hmm. And that's the thing, right? You're playing that gambling game.
Ooh, and
this is
lockup period.
Interesting.
The lockup period for CoreWeave is expected to expire September 25.
September 25. If you do believe CoreWeave is going to be a bigger company than it is now, the best way to go about it is to purchase Course now. Like, if we ever see, because you're getting already kind of like that 20% discount or so on whatever it is. That one's also pretty interesting.
Yeah, I mean, but do we believe that CoreWeave will be much higher by Q4, like even higher than today?
I don't, but
I mean, it's already, yes, it did pull back a little bit, but I mean, if we were here at 100 or whatever, I'd say okay, maybe yes. But
if we would have been at 100 without hitting any of these, I think it would still be the same thing. It's always that fear of it. Like, if it's 100 now after hitting 165, then I think it's all about sentiment, about price action, right? I think you don't think if CoreWeave was at 100. Mm-hmm.
We are now at 80 billion, a little bit less than $80 billion. At 100, I mean, at 100, you'd be what, closer to 50?
50?
With all the announcements.
Still intense when you think of, but it's still intense when you think Oracle was only like $300 billion about a month ago.
Yes. I know we were both surprised by that number. It's quite crazy, especially when they will generate $30 billion from just one contract starting 2028.
Uh,
But
yeah.
yeah, I don't know what the play here is, to be honest. I don't know what the
If
play
we
here
see a massive pull down in CoreWeave, I think
in
Chorus is the
CoreWeave
place.
or Coruscant.
Well,
Ah,
regardless, right? They're moving together. So if there's a massive correction in CoreWeave, you end up buying Cores because you're getting it even at a bigger correction because that one's going to even drop down even more.
but wouldn't you want to buy cores at a price where, I don't know, it will drop to $14 or whatnot? Hope that CoreWeave does grow in stock price, and then get your Core Scientific shares converted to CoreWeave at a premium.
Yes, yes. So, but if we buy it at 14 now, we're assuming CoreWeave is going to be higher than it is
Correct.
in the future. So the better risk to reward ratio is if we believe that's the case, but the market gives us an opportunity where CoreWeave like dips and then Cores dips even more. So now your arbitrage becomes even larger.
Yeah, I mean, but
In a
CoreWeave
great scenario.
has to drop more
Yeah.
than just the
Yeah.
40% that we're seeing
Yeah,
right
yeah,
now.
more than just a four. Yeah, like a really good market correction. If you get a really nice market correction and you want to get into CoreWeave, I think the better result during that scenario would be to jump into Cores if there is that large arbitrage that we still see right now.
Very tempting, this whole thing. Very tempting.
Put it on the watch list.
Yeah, no, but I mean, maybe this will present us an opportunity to buy the other ones that we wanted to YOLO on. I mean,
Yeah.
Applied Digital doesn't move an inch. Like it was 10.2 before, it's 10.2 right now. It's like we don't care. Plus,
Yeah.
does this impact a deal with CoreWeave for Applied Digital, or how does that impact Applied
I
Digital?
wouldn't think so. I mean, I think if I at the current space that we're in right now, I think CoreWeave just needs more infrastructure. So it's just trying to pick up as much as it can. Um, and I'm pretty sure they, at least with Applied Digital, they probably signed some long-term contracts. Maybe there is that fear that there might be some canceling in the notes, and unfortunately, we don't get these contracts. So that could be a fear that after 7 years or after 5 years, you can start to sign off. And now, if you have more of your own infrastructure, your dependency on Applied Digital becomes less. But in the current AI landscape, I don't think that's an issue.
Interesting, because I would assume that the deal is one of the reasons why also we've seen the stock drop and then basically plateau here at around $10 or so.
Oh, any way you can put them together, Neil? Is that a thing? I don't use charting, but if you like, I would love to see that now. Like, if it's extremely correlating to that.
Cores or
Course, yeah. If you put cores, is it like does it completely change? Huh? Kind of. No, not really.
no, not really.
No, not really. Not really.
No.
So Eddie J here is wondering, so is Core's going to behave like a leveraged CoreWeave vehicle? I think it is. And I think it's actually going to behave more as a negative leverage. Like if CoreWeave jumps up a lot, I don't expect Cores to jump up a lot because Cores investors are still going to be like, this is overvalued. But if CoreWeave drops a lot, I think Cores is also going to drop a lot because they're going to be like, see, I told you this thing was overvalued. So I think it's going to act leverage, but it's going to act more leverage on the bearish side than on the bullish side.
Yeah. I mean, this is going to be an interesting story to follow.
Yeah. So
But yeah,
Gordon says CoreWeave has massive debt and almost 70% of their business is with Microsoft. They talked about it, Gordon, in their last earnings. That 70% is completely evading now. Now you have OpenAI, you have Google there. So I forgot they mentioned the actual number, but they expect no one customer will be X percentage of their revenue from now on. Before it's because Microsoft was the only one really doing it, but now you see Google and you see OpenAI. And then I have another question here. My A Tiger, hi Jose. A while ago, you had a video about Marvell 60, then and good by moment. Now it's at 75. What are your thoughts? I still like Marvell. Obviously, I like the risk to reward ratio at 60, closer to 75. But I would say I did actually buy around the 72 levels as well. I recently purchased around 72s. So I still am. I still have from 60 to 70. It's not that massive of a jump. So I would still, if I was bullish at 60, I'm still bullish at 70. But if it jumps back down to the 60s, I think I'll add even more and more.
Interesting. There was here a question for me with regards to the exit strategy. So for me with United Health, I'd be happy with a 50% win here in the short run. Of course, it can go higher, but I think since I am more in tech than in health insurance, I think at this size, I'd be happy with a 50% return this year. So in the next 6 months, I don't know if that's going to happen or not. I know it might sound greedy, but I do think that 50% correction here is an overreaction. With regards to Oscar, since Oscar is a much smaller company than United Health, and the opportunity could be much, much bigger, the exit strategy is, for me, remains to be seen, depending on if midterm guidance does change a bit or not. If not, then I might just say, you know what, another one that might become a multi-bagger in the future. But United Health is definitely more of a 50% gain, and I'm out.
Very nice, Neil. Very nice.
Let's actually see what Tesla is doing pre-market. It's down a little bit more. We're now $294 for Tesla stock, which is under that $300 200-day moving average at the moment. Micron, I do wonder what Micron is doing right now. Still, okay.
Are you happy with your position in this one, Neil, or is this one your dollar cost averaging over into?
No, I'm happy with it right now. I'm happy with it right now. Also because the price did increase enough for it to become a little bit bigger. So no, I'm happy. I don't. Same with AMD. I don't see why I should be adding now more and more to that position, since I've taken plenty of opportunities to add throughout this this up cycle and down cycle before. So I'm happy with that position. And plus, if it does work out, I think the upside is pretty big from here, anyways.
Yeah. Let's see. Any other news we have here coming out on the market before it opens?
Let's see, because that deal did come out of nowhere. That's interesting.
Yeah. It's also such a tricky deal too.
Yeah. Yeah, no, it's I don't know. It had an amazing IPO, and I think they're taking advantage of that for sure. Especially since the lockup period does expire September, so they want to do this before. I guess people can sell more, but we'll see. I also seen that Oracle has said that they will offer big discounts to U.S. governments on their software services. Could of course increase the volume, but then if it's a discount, then it's a discount. I think Salesforce, Google, Adobe have all done the exact same thing. Let's see what the market does right now. Europe still green, although FTSE here is down a little bit. Pre-market in the US, we are back reddish. Dow was green for half a second. Now we're back in the red. Asia markets are same as before, a bit mixed. Bond market unchanged, obviously. And then, euro dollar still 1.17. US Japanese yen is 145. Interesting. I do wanted to show the VIX, the volatility index, because this can be a very interesting thing. So currently we're sitting at 17.73. if you look at the year-to-date performance of the VIX, of course, you had that huge spike at the start of April, which every time this happens, historically, you should be buying hand over
Yeah,
fist.
that's
But we have seen that 2022 VIX has happened time and time again. It happened, of course, in March. It happened in February. Of course, we also had that DeepSeek moment, but it has happened a couple of times. Will it happen again? I mean, this week could be the perfect setup for the VIX to go and revisit 20. As you can
Neil,
see,
just
it has
quick
done.
question. In the past 5 years, how many times has it gone to that like spike level of
This
oh
spike
wow.
level of above 50 has not
Yeah.
happened a lot in history, actually.
Nine.
We've had, of course, spikes in the 30s, but
Yeah.
in the high, as you can see, well, we had that COVID one, of course,
Mm-hmm.
and I don't even think it doesn't even show
That's
you
so
the
wild
spike
that
that we
now if
had,
you look
right?
at 5 years from
Because look, it doesn't even show us the big
show,
spike we've
yeah.
had right now. But it doesn't happen that often. It's usually very bad
Sure,
events.
Yahoo CNBC. How didn't I show you? But also, I just think it's pretty crazy though, Neil. It's 5 years. If you look at the 5 years, you no longer see the COVID spike. It's been 5 years since that. That is wild.
Let's actually see if I can show it here.
Put that on the alerts.
Yeah. So the COVID one was a crazy one at
That's
100.
crazy. 100. Oh wow.
Easy buy.
um,
Let's actually revisit our best friend, the teddy bear, the big bear AI.
the big
I don't
bear. Yeah.
I don't know. I keep seeing. You probably also keep seeing this sticker in your comment section. We've seen it quite a lot of times here in the chat as well, and I've seen some other.
I see this one, and because of
Posts.
you, I see the other one a lot too now.
Which one?
Aaron, whatever.
Iron, yeah. No, but I mean, Iron. At least I understand why. It's still expected also to grow a bit faster. Big Bear at the moment is growing like a mature company. Like the last time I checked, is it grew, I think 3%. Let's see. Don't want to sound bearish. Bear-ish, Big Bear AI. Over the past 3 years, compounded, it has grown 3%. Okay, it's true that over the next 2 years, it will grow 9%, but still, I mean, if this is supposed to be the next Palantir or whatnot, or why is it growing like, I don't know, an Adobe, for example? So, yeah, I don't know. Could work out, of course. Their CEO, the new one, has a background in has worked in government before, so okay, could work out. But so far, I mean, I'm not really seeing huge revenue growth. That might change with huge contracts, but yeah.
Very true, Neil. Very true.
We have 6 minutes
Number one, I
to the
mean,
market opens.
with stocks like this, right? I mean, momentum is definitely a big player in stock price growth. And then I think that's what you're seeing with a lot of excitement in AI is you have a nice amount of momentum. I prefer my type is the momentum with maybe some fundamentals behind it, where you have a double whammy. And I think when you have a double whammy like that, it protects a little bit in kind of like the pull down. Where something like this, if it's just purely momentum built, you can obviously make tons of money out of it. But if it's not fundamentally driven either, that crash down is going to see that same momentum as well. So it's you can make money in this market any type of way. But I prefer to hedge my bets with a little some fundamentals.
Yeah, because I mean, everybody's a genius, right? In hyper bull markets, like we said, you can talk about whatever stock and it will go up. Doesn't mean you're smart; just means the market is stupid. Martin here asks a good question. What happens if South Korea can't get a deal done or a pause on tariff? Will this affect SK Hynix and so on? Probably Samsung and all of the others.
Yeah, I don't know. That would be interesting because I mean I'm pretty sure HBM will most likely. So I guess it would depend more. And I think HBM wouldn't be impacted.
Because that's from Taiwan.
Just no, just because the United States is worrying about AI supply chain, and people are going to tell you, look, we need HBM to make these great AI chips. I think the one that's less critical is consumer market. So it could provide maybe a negative sentiment for Samsung and SK Hynix on the consumer side. Which would be bullish for Micron on the consumer side if you kind of see some prices. So I think with companies like SK Hynix and Samsung there in South Korea, you're gonna it's gonna be more of a product dependent where there'll be a baseline unless it affects these types of products or these types of markets.
Fair enough. Fair enough. Let's see. Let's see if we got some other breaking news. Probably not.
Yeah,
The
I
big, the
saw
biggest one
Citi did a price target upgrade
for
of
who?
both Nvidia and AMD. So
Huh.
Citi today raises its price target on Nvidia to 190, up from 180, while maintaining a buy rating. And Citi today raised, and let me just copy on chat so we can just share it and people can read.
Let's see if someone posted this.
There. So Citi today raised its price target on Nvidia to 190, and for AMD to 145, up from 120. I just did it, Neil. I did it already. Okay, I did it. I did it.
Congratulations.
I did it. Okay. What is AMD stock price looking like pre-market, Neil? Any downturn right now?
It's coming crashing down like a rocket.
Correct.
No, it's down $1.
Yeah.
It's down one.
AMD. I mean, Nvidia is down about 1% as well. We do get Taiwan's monthly numbers this week, so that's going to be interesting.
We have some IonQ news. If there are some interested quantum folks here. So that one is up a little bit at the moment, up 4% because IonQ priced a $1 billion equity offering with Heights Capital at $55.49 per share, which is, of course, a 25% premium. The deal includes 36 million 7-year warrants exercisable at $99.88. IonQ says this brings its pro forma cash to $1.68 billion, marking the largest single equity investment in quantum industry history.
Wait, so what did they do?
What do they do?
No, what did they do here? I got lost here. I was looking at something else.
They did this.
Okay.
I guess when you burn cash, it's always good to raise, especially when the hype is still high. Yeah. Oh, you guys are bearish on quantum. You don't understand anything.
More another one. If Trump goes nuts again and we have Liberation Day, will you do therapy sessions with us again? We'll do therapy session whenever we need to.
Of course. Therapy session for free. For free.
We got about a minute before market opens. Vindin says no. I don't know for what, but yes.
No, but yes. Let me. Okie dokie.
I didn't really read it. Is it open? Oh,
it is
open.
open.
All right, we'll look at this
Everything's coming crashing down.
Bom, bom.
Let's see.
Yeah, let me open up my trading view really quick.
We got some things on the move here.
Wolfspeed's been up again.
Yeah, I mean, makes sense.
I wonder if they think the CHIPS Act being good again, they'll get money before they bankrupt or something.
It's the restructuring. It's the restructuring.
Yeah.
Let's see what we've got here. So Nebius down 3% in sympathy of CoreWeave, I guess. Tempest is down, Oscar down 1.6, Reddit down 1.3, Micron 1.2, Marvell can't catch a break, it seems, also down 0.8%. New Holdings down 1, Intel is down, it doesn't really change much. Then all the rest are down less than 1% here.
Yeah. You saw Applied, right? Did you mention Applied?
I saw Applied.
Now below 10.
Rocket Lab is up almost 5% now, probably an AST as well, probably because Elon is getting more political, so that might be a win for Rocket Lab and a loss for SpaceX, although I don't really think that's reasonable to think. Uber is up 1.4, let's go. Apple, we don't care about that company. SoFi is up 0.2. Oklo is up a little bit, and all the rest seems to be red at the moment.
Adobe's green. If Adobe's green, things are weird.
If Adobe is green, Adobe is green. Huh. Adobe is green. Let's actually cores.
Down 22% at $14.
Nice.
I think it's the market. Cores right now has open call option on CoreWeave, and they're not liking it. They're not liking that in their portfolio.
I mean, let's see if it can hold. This is the 20-day moving average at 14.2. Then we have 50-day moving at 12.2, and then a 200 at 10. What does CoreWeave do? Barely down 3.7%. Yeah. What a rigged system.
What's that red line you have, Neil? What EMA is that?
20.
Is it EMA or just MA?
I think it's MA. Yeah.
Oh, okay.
MMA.
Loser.
Applied is down. Applied is down today. So yeah,
$9.40. Oh no, that's the. Is that the really?
Applied is at it's down 10%.
Oh, I see.
This is getting interesting.
It is. Let me open.
Iron is also down 6%. And then Cypher is down 8. Okay, interesting. So I guess CoreWeave is like breaking everything up right now.
Yeah,
CoreWeave is breaking everything up. Uber at all-time highs, ladies and gentlemen. Autonomous vehicles are not going to crush the business, it seems. Uber is at all-time highs. Oh, actually, what does our other darling do? Of course, it is back under 180. Google is
look at it. It's nice just going up slowly but surely. It's little steps here and there. It's nice.
Tesla is down 7.8 at $290 at the moment. What else? What else do we want to have a quick look before we end the stream? SoFi.
Oh wow, SoFi is doing nice, man.
About time. We're back to where we were basically in January. Whereas PayPal is also slowly but surely, like a tortoise, getting back up there. We still have a long way to go to reach the highs of this year, but AMD.
How about you, United Health? Did you look at that one already?
No, United Health, $306, basically down 0.6%. Oscar down 1.7%. So we are now under that 50-day moving average. We'll see what happens with that.
Webull.
Wait. First, Zeta Global. Also down 4%. Interesting. Very interesting. My thoughts on Zeta haven't changed. I still think it's a good value and probably will be acquired, in my opinion, in the next 12 months. Webull is down 15%. Did rebound just on that $12 mark, which is the 20-day moving average. So big reactions in the markets, some opportunities, probably yes, no. Me and Jose might go YOLO on a couple of
Michael Yella, yeah,
on a
definitely.
couple of those little names this week. But yeah, this is going to be very very interesting to follow, because this CoreWeave deal does change the game a little bit. I will ask like the Geminis and the whatever, just to see how does this impact the Applied Digital deal, or how positively or negatively.
Yeah. The other thing,
In
Neil, I would say, just final thoughts here, is I would think for not applied digital, for Course to take this deal as well, I think they also believe their stock is overvalued. So here, usually when you see a stock transaction like this or stock base, it's where, unless you're being bullied or getting the messed up, it's both of you guys understand that both your stocks are a bit overvalued. So overvalued divided by overvalued kind of cancel out.
So it's a good thing, you're saying.
So I think that might create the bearish sentiment on everything and might showcase that everything is just overvalued in that space.
Yeah, no, I agree. For those that are interested, my Webull video is now live. So if you want to go watch that, it
Go
is
check
the
it out.
latest video on the channel. Of course, I can expect already, it is down 15%. What are your thoughts now? Same thoughts as before. Same thoughts as before. Anyways, that's all we've got for you right now. We will be back, of course, tomorrow morning. So thank you all for joining us here on YouTube and on X. We'll see each other in less than 24 hours. Have a good day. Don't overreact, and enjoy.